In any case, S&P is not happy this morning. It's been deteriorating since early this morning. S&P futures are currently down 30 and a half. The Dow is down 225. And in the bond market, we have the 10-year up 10 ticks and the 30-year up 13 ticks. The 3-month T-bill is at 14 basis points. The 3-month LIBOR is at 36. And the Fed funds rate is at 5 basis points, as it has been. World equity markets are now deteriorating. They were holding up better earlier today. FTSE is down 2%. The Euro Stoxx is down 1%. The DAX is up 1%. Nikkei obviously closed in Asia by the time deterioration happened here. Nikkei is down 20 basis points. The Hang Seng Index was down 74 basis points. The Chinese CSI 300 was up about 1/3%. In the currency markets, we've had dollar weakness, although there's been some movements. The yen was stronger earlier this morning. Now it's just turned negative versus the dollar, down 6 basis points. The strongest currencies are the Scandies, the Scandinavian, the Swedish krona is the strongest. See, when you're trying to do all kinds of things simultaneously, that's when it's a little bit difficult sometimes to to take care of things here at the same time while talking about the markets. Multitasking isn't the strength. The strong suit. Gold is up today. Gold is up 90 basis points now at 1733. But back to the currency space, so the Scandies are the strongest, and the Australian dollar is now negative as well, was positive earlier. Bonds are strengthening now a little bit as I speak. In Europe, it was the corona-affected industries that were the weakest ones today. In the news, of course, is proposed potential things about China, whatever our president might be announcing, and beyond that, the Twitter spat, and I've given a rant on that yesterday. As a private company, Twitter can, of course, do whatever it wants. I'm not so sure whether it's the most prudent thing what they do. Today, a tweet was blocked. You had to click through it, through a disclaimer before you were allowed to get to it. That's not going to get people happy. There must be other ways of providing information without upsetting half of the audience. But of course, we'll see. This is going to be, if nothing else, entertaining or unnerving to watch. Just a sign of the times that we live in, I suppose. And by the way, there's a lot of talk about the social media companies being regulated. The question is, on the one hand, whether that holds up in court, but on the other hand, the establishment benefits from regulation, because it increases the barrier to entry. So let's just keep that in mind here. Good. Paul is about to start speaking, so I'll keep it brief as I promised. Stay healthy here. Have a great weekend, and talk to you next week. Bye.